Indeed, I was wondering, Mark, but I know it's for a good cause and it all works together for all of us. So thank you so much. And good morning, everyone. Welcome to Business Morning on Sunrise Daily. Just about 30 minutes of business, and then we'll hand you back to Mark and Ayo in the Sunrise Daily studio. So we'll start this morning from the Naira, and so that it was red yesterday. The NAFEX rates depreciated by 3 Naira 44 kobo against the dollar to fix at 1,510 Naira for a dollar. During the day's NFEM session, the market maintained its bullish trend with bids surpassing available offers, although the Central Bank of Nigeria participated early in the trading session. So there we'll see that for NFEM and the CBN rates, perhaps activities overtook the calculation of the closing number, but it was a red market yesterday. Demand did surpass supply at the currencies market, and there was a mismatch between the rate which buyers and sellers were willing to transact. Only a few trades were executed in the market yesterday. But we see there, well, according to the closing number for NAFEX, we're still within the 1,500 range, at least below 1,600. That has been our rate for some time now. From there, we move to the oil space, where prices fell on Thursday on expectations of a potential peace deal between Ukraine and Russia and what it would mean to end sanctions that have disrupted supply flows, and U.S. President Trump's intention to introduce reciprocal tariffs. That's stoked inflation. Inflation was out yesterday for the United States, higher than expected. But look at the numbers. Brent went down 55 cents. That's about 0.73% to $74.63 a barrel, while WTI dropped 52 cents, also 0.73% to $70.85 a barrel. Brent and WTI fell more than 2% yesterday after Trump said that Russian President Vladimir Putin and Ukrainian President Volodymyr Zelensky have expressed a desire for peace in separate phone calls with him, and Trump ordered top U.S. officials to begin talks on ending the war in Ukraine. Remember that Russia is the third largest oil producer, and sanctions have been imposed on its crude exports, and as a result of its invasion of Ukraine nearly 3 years ago. And of course, this has affected prices. And Trump's threat of additional tariffs against U.S. trade partners, that has also pressured prices because of concerns that may reduce economic growth and therefore oil demand. He said, that's President Trump, that he would impose reciprocal tariffs as soon as Wednesday evening on every country that charges duties on U.S. imports, in a move that ratchets up fears of a widening global trade war and threatens to accelerate U.S. inflation, which was out yesterday, higher than expected. Now is now at 3%. Analysts were expecting that inflation in the United States would be 2.9%, but I guess all of these restrictions have started showing. And interestingly, we did see that the U.S. inflation of yesterday was driven by the price of eggs and energy. When you hear of eggs and you're like, why in the United States? Well, somebody had said that the farms are emptying out with the migrants being driven out of the country. These are the people who actually work on the farm. So if we see eggs on the list of inflation drivers, I guess President Trump might have to think of other ways, of getting the farms active and those menial jobs being done. But still in the oil space, Nigeria's crude oil production has risen to 1.54 million barrels every day in January from 1.49 million barrels recorded in December. That's according to OPEC's latest monthly oil market report. The 54,000 barrels per day increase in inputs to 1.54 million barrels represents a significant rise, with the figure remaining within OPEC's production quota for Nigeria. Nigeria retains its leading position on the chart for Africa's top oil producers within OPEC. At the same time, Nigeria's oil rig count remains unchanged in the month of January, which is at 12. Still doing energy matters, the European Union and Germany have launched an initiative to accelerate investments in renewable energy and improve electricity access in Nigeria, particularly in the rural communities. The initiative, known as Get Invest Nigeria, it was unveiled in Lagos as part of broader efforts to drive the country's energy transition through sustainable financing mechanisms. Well, speaking at the launch, team leader for green and digital economy at the EU delegation to Nigeria and ECOWAS, Ms. Nga Stefan Winchi, says that it's designed to unlock finance for sustainable energy projects and businesses in the country, providing tailored solutions to address Nigeria's unique energy challenges. Well, let's stay in that energy space now, especially with oil production in Nigeria recording that increase with Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company. Mr. Rwani, good morning and thank you for joining us on the program.
Good morning. Thank you for having me this morning, Ini.
Yeah, so we see our oil production for January is up. That's good news. Looks like perhaps the target of the 2025 budget may be hit before the end of the year.
Yes, let me, while I didn't hear you very clearly, but let me come up with what I think, one, is the breaking news. The breaking news is that we've carried out our inflation survey, and that we can say, using the old methodology, that inflation is going to decline to 33.3% from the current 34.5. So basically, there's going to be a 1.5% decline in the rate of inflation when it comes out this weekend.
All right.
If you use the old methodology.
All right, Mr. Rwani, can you hear me now? Can you hear me?
I can hear you clearly now.
Okay, all right. I was asking about our oil production. We saw that good news of an increase in January. And I was saying that it looks like we're on track to hit the target, the 2025 target for oil production.
No, I think our oil production has gone up to 1.53 or 1.56, according to OPEC, which is a remarkable improvement, which means that one, the the amount of oil bunkering, the amount of oil leakages and vandalistic activity has reduced. So there's no question about that. That's good news. But the bad news is that we have not, our price, budget benchmark price is based on $75. And if you look at it over the last couple of weeks, the oil price, Brent, has been slightly below $75 a barrel, which leaves us no room. The projection of production in the budget was about 2 million barrels a day. We are nowhere near that. So in terms of revenue projections, I don't think it's going to come out from oil. It's going to come out more from taxes. But as I was saying, when we had that short interruption, I was talking about oil, the inflation projections that are going to come out later after this news bulletin. We are seeing 33.36 as our projection, as against the current level of inflation, which is 34.80. So it's a 1.54 decline using the old methodology for January. This is very important because this will be the highest, the greatest drop in headline inflation for many months, which means that one, consumer resistance is kicking in. Two, that money supply saturation is reducing. Three, that the exchange rate pass-through effect is having a positive pass-through effect in the sense that the exchange rate has appreciated at least somewhat in the last 3 to 4 months. But most importantly in this whole effect of this inflation that we are seeing is the fact that Dangote has brought down the price of diesel and brought down the price of petrol. This is very significant. Even though it reduces the producer price index more than it reduces the consumer price index. So it's important when you look at these things. But this is January, and January traditionally is a period when people have no money, people are paid school fees, people are paid their rent, and therefore they don't have money. So consumer resistance has a part to do it. But we cannot underestimate the impact of the reduction in the price of diesel, which just happened, and the reduction in the price of petrol, which happened a few weeks ago. So that is important. But now, if you if we go into the prices of the commodities that we've seen, we are beginning to see another worrying trend. All of a sudden, after tomatoes have dropped sharply, we are now seeing tomatoes up again by as much as 28%. A bag of tomatoes now is about 110,000 naira. And we've seen also an increase in the price of pepper by 23% to about 52,000 naira. Rice stayed flat at 100,000 naira. So the only items that have reduced in the last week has been gari, which is down by 5%, and onions, which is down by 15%. So again, we noticed that trend in January, but now in February, we have seen price of tomatoes up, price of pepper up, and price of the bag of rice flat. And also, we are beginning to see the international effect on the price of eggs. Eggs are now going back up from 6,500 back to about 7,000 naira for 30. And this is happening also in the United States. So the good news is that January is going to show slower inflation, but the worrying news is that in February, we are going to begin to see some increases. Don't forget, Ramadan starts in 2 weeks, and that is why probably the price of tomatoes and some of these vegetables are beginning to increase. We also have seen a sharp increase in the price of beef because there's been supply logistics of beef cows coming from the north to Lagos. So there has been sharp increase and actually scarcity of suya in the market and scarcity of the substitutes of beef, which is chicken, fish, and others now begin to react to that.
Yeah, I guess, Mr. Rwani, if there's any comfort, when you talk about the price of eggs increasing, we also see the major driver of U.S. inflation, which was out yesterday, higher than expected.
Yes. Now, the U.S. inflation came out at 3% for January. That's the highest level in about 7 months. But you can imagine that, and that is why the Federal Reserve is saying that they are not in a hurry to cut rates anymore. What it means is that global inflation, you see that global inflation is now beginning to go in the other direction. One, because of tariffs. Two, because of production costs and the trade wars between countries. But our view is that after the tariff and posturing of Trump, you would see that if there's a kind of truce between Ukraine and Russia, which we think will happen in a few weeks, then all the prices of goods, commodities that have increased because of that global supply chain logistics problems will reduce. So you would see immediately that when that happens, global inflation and commodity prices begin to come down, and there will be some era of stabilization there. So one, the shock of the tariff wars. Two, the truce in Ukraine and Russia and in Gaza brings down the price of oil, brings down global commodity prices, strengthens the dollar for a little while, and then we'll begin to see a kind of flatlining of commodity prices. However, I think you must bear in mind one thing, that the Chinese New Year just ended, and we noticed that a lot of people who were buying dollars to buy products are now buying Chinese yuan, and that has actually made the naira to appreciate somewhat. But generally speaking, we don't think the naira is flat at this point, trading at the levels that you just said. In the official market, it deteriorated. It depreciated, but in the formal market, we're seeing it trade at 1,570. That is in the parallel market, 1,570 naira a liter. Sorry, a dollar. That is where it has been. Don't forget, this thing got up to 1670, 1675 about a month ago. Now, if it has gained 100 naira in the last 1 month, it's quite significant in its inflation reduction impact. I think that's what you must bear in mind.
All right, Mr. Rani, thank you so much. Certainly be looking out for those inflation numbers we're expecting from the NBS. And I hear your hints there. That's the old methodology. We wonder what the new methodology would bring. But thank you so much, Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rwani.
Thank you very much for having me.
We're still discussing commodities this morning, and we hear that the federal government has announced plans to recapitalize the Bank of Agriculture to enhance food security and make food more accessible and affordable to Nigerians. Will this actually bring that food security we've been looking for in the country? We have joining us right here in the studio at this time, Mr. Tunde Banjoko. He's the Managing Director of BO Farm. Joining us. Good morning, Mr. Banjoko.
Thank you, Elise.
So I know you're the friends with the MD of Bank of Agriculture. I've been begging you to bring him. I've tried to reach him. I've not been able to. You haven't been able to bring him on the show. So I think I should put you on the spot. What's this recap supposed to look like?
I think what we are looking at is for this first quarter, the conversion is starting with the Vice President himself, who said last year that they are going to recapitalize the Bank of Agriculture. And now the Minister of Finance is sitting on that team, working on how to work out both the recapitalization and the restructuring of the bank. So we are looking at how much are they raising and the effect it will have on the bank. Definitely it's going to have serious effect on our agri space.
Hopefully.
No.
Hopefully.
Hopefully, if they go ahead, because the conversion didn't start yesterday. It's been an ongoing conversion for about 4 years now, 3-4 years. And now...
But we still haven't seen steps. We've only been hearing words.
I think the only steps we can say we've seen is the conversation they are having. And I think some internal information from them seems to be that maybe a bit of auditing going on within the bank itself.
So is it going to involve the private sector? Are they going to the capital market? How is this recap supposed to look like? Is it just the public sector?
You know, for now, the bank is owned largely by the government. 60% by the Ministry of Finance, 40% by the CBN. So we don't know if they will be willing to relinquish some of their shareholding to attract some private investment. I'm sure there's no clarity.
That will also attract, if I can say, scrutiny. Because if the private sector is involved, if the capital market is involved, then you know that we will check what you're doing.
If it's going to work, really, the private sector must be involved. They must be willing to do like other banks. Why not sell shares? Let there be private investment into the bank. And, you know, for me, what I'm even more bothered about is the fact that for the past 10 years, the bank has been running without a board.
Without a board?
Without a board. So if a bank is running without a board, meaning it's more like a political arrangement. And, you know, so I think there should be more scrutiny in their operation. And maybe that's why the bank has not been strategic enough, raising funds on their own and probably looking for means to revitalize the industry. Because what have we seen in the last couple of years? It's been the CBN doing some intervention. We've seen different agencies that have been set up to do what the bank was originally set up to do. So I think if we're serious, we should involve the private sector.
Mr. Banjoko, I'm giving you the message. The MD of Bank of Agriculture is your friend. Could you please help us tell him that the private sector needs to be involved if it's going to work?
No, he's not the MD now. It's not his job.
Yeah, it's not the MD.
It's the Vice President we should be talking to and the Minister of Finance.
Well, since I can't reach them and I can reach the MD through you. I mean, if he's running a bank, he does have a say one way or the other.
But you have a boss. You are appointed to serve.
See, you're defending him.
I'm not.
He's really your friend.
I'm not.
But I mean, if we were to see a functioning Bank of Agriculture, what should it look like? I mean, it's so obvious that you do need private sector participation. The government at the middle is already overwhelmed with expenses. So, and these are opportunities. And we're talking about food insecurity in the country, which is a major and a real threat.
You know, for me, I think we should look at prioritizing that bank. Like, I think we've had that conversation several times.
Yes.
What the government should do if they are really serious about this thing, bring some private investors into this game, restructure that bank. Even their processes is still orthodox, completely orthodox. You know, a lot of paperwork, not digitalized and all that. So they should bring some private investment into that bank. And, you know, you look at why I'm even passionate about this conversation is, you look at in the last 6, 7, 8 years, I think it was in 2021 that the agric industry got the highest from the commercial bank, about 5% of the loans. about 1.3 trillion, 1.04 trillion that we got. So the commercial bank of today does not understand the way agric work in Nigeria. So the only bank that understands how agric work and how micro lending works in rural community is the Bank of Agriculture. And I was doing some comparison. I looked at what the Bank of Agriculture of China is doing. As at 2018, their revenue was about $3.2 trillion. And I'm looking at where are we? We can't even get figures for what we are doing. You look at what we are doing in that sector. I looked at some quoted companies of agric, Okomu, Presco, looking at their revenue for 2023, 2024, and I'm imagining if a Bank of Agriculture is funding more of such companies. Or I think Presco did 198 billion revenue, profit before tax of 128 billion. Oh, no, that's for Presco. Okomu did 130 billion, did about 52 billion before profits. And before tax. And I'm asking myself, what if we have more of this company that can be funded by Bank of Agriculture? So I think the I'm more interested in the Vice President and the Minister of Finance, who is leading the team, to look at how we can have an overhaul of this Bank of Agriculture because it's long overdue. And you look at a bank that they have widespread, about 110 branches. But I'm sure...
Functioning branches or just branches?
Do we even know the branches? The last time I was in one of the branches in my own hometown, you can only shake your head. You can see the staffs, they are not motivated. You can see the operation, still in those days. So I think it's a good conversation, but the prayer we are all looking forward to as industry player now, that the body language will push it to the end. If we are really serious about agriculture, because I think the concern really, some days back we looked at what is going on with the budget for agric again, that it's being reviewed downward instead of going upward.
Because we expect agric to take care of itself. We know agric in Nigeria can take care of itself.
It can't. So, but I think we've always had that assumption that agric is just for empowerment. When they cry, give them rice. When they protest, give them rice. And I think we've gone beyond that level. So I think we should really start prioritizing this conversation. The president himself should see to the fact that whatever they need to do to bring this bank back.
After all, the president had declared a state of emergency.
But state of emergency verbally, the body language did not correspond with the action that we saw. So I think we should match words with action now.
So I do know that, for instance, the Bank of Industry, they do seek funding from, some international, like Afrexim and all of that. That could also be an option.
That's what they should have been doing, really. But I don't know their own model of operation, probably because of their own setup.
So if there's a restructuring, perhaps
that's what they should
also
be doing.
Be taken
But
into...
BOI is no longer being seen as a government institution because they've been, I think their last asset declaration is close to $1 trillion now. And then they are pushing funds. Their process has been simplified, and you see them expanding. So that's what I think.
And I've met a lot of beneficiaries of the Bank of Industry. I haven't met any from agric. I know perhaps you have met.
I think a friend spoke with me yesterday night. He's working on something with them. But look at Bank of Agric, for example. Bank of Agric will tell you, below 1 million, you don't have to collateralize it. They will fast track that. But anything from 1 million above, you have to collateralize it. BOI will tell you below 10 million, don't forget about collateral. Just bring 2 guarantors. Above 10 million, bring a collateral. So, but in today's economy, what do I want to do with 800 or 900,000? Maybe that will just take care of maybe an hectare of cassava, maybe 1 or 2 hectares of maize, and the growth needed in that industry will never experience it. So look at 1 million, 10 million. If we have BOA giving at least 13 million to farmers that needs the fund now in the industry, would have seen a lot of transformation, a lot of changes. Our productivity would probably have increased by now, but still holding on to, I looked at the history of the bank. The bank was started in 1972. 72, they've had to change name from Nigerian Agric Bank to this, to that. But their processes, I'm not sure they've looked at that.
Well, I guess we'll just have to keep pushing this conversation because
Yes.
food security is everybody's.
It's not something
It's
to
the
play
foundation
around.
of any economic activity at all.
Yeah.
You know, so and we'll tell you to please help us talk to your friend. Okay. Thank you so much, Mr. Tudeba Njoko, MD of BO Farms Limited.
Thank you.
All right, just before we head back to the Sunrise Daily Studio, let's see how the market fared yesterday. It was really positive, 1.17%. And yes, we crossed over to the 107. Remember, intraday, we're at 106. 900 or was it 700? So at the close of trade, we crossed over, the market cap also crossed over to the 67 trillion naira mark, even though we had a lot of red for the activity sectors. Trust banking, always very liquid. So we saw banking was 0.49% up. Insurance, in spite of our third-party insurance, I guess just profit-taking, just a temporal drawback there. Consumer goods was really good yesterday, 1.44%. Industrial good was even much better, 2.11%. Oil and gas, something's happening right there. Consumers are smiling with the reduction, like someone with the petrol price. Investors seem to also be smiling at the NGX. And top trades were sterling. Let's see that a bit. So there you see banking in the green, consumers in the red, industrial goods, insurance, and oil and gas. But I'll give you intraday numbers. That'll be at 1 p.m. Ladi will be here. I'll also join him later on to give you intraday numbers from the NGX and other parts of the world. For now, let me hand you back to Malpe and Ayo in the Sunrise Daily Studio.